All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. New week is upon us. And who knows what this week might bring. Today's April 14th, 2025. The top story this morning is we'll say, erratic headlines that came out from Washington, D.C. over the course of the weekend. And initially, Friday, market rallied into the close. It was a wild week last week. Let's not revisit all that, right? News cycle moving very fast. A lot of news flow happening, things developing almost by the minute since this trade war kicked off. But after the close on Friday, we got a pretty big news announcement out of D.C. It wasn't even really an announcement. It was just kind of like subtly snuck into the news feed by the Department of Commerce that electronics would be exempt from the reciprocal tariffs. Things like smartphones, semiconductor manufacturing equipment, flat panel TVs, basically all the things that big tech buys are going to be exempt from the 145% tariffs on Chinese goods. I feel like I got to keep repeating that number because, oh my God, 145%. But I digress. And look, my initial reaction to that story was WTF. I mean, I'll be honest with you. I read that story and personally speaking, I was pissed off. Why is it that a mom and pop hardware store that sells stuff manufactured in China has to pay 145% tariff? But, Apple is too important. Apple gets an exemption. They don't have to pay those tariffs. Big tech, the most prolific outsourcers of all, is being given a free pass on these reciprocal tariffs that small business is not. Look, small business can't afford to attend $1 million a night pack dinners at Mar-a-Lago. Small business can't afford lobbyists to go get themselves carve-outs from legislation. Part of the problem, part of this mess that we're in is every time we pass a new law and we're like, we're going to fix things, we give a carve-out to all the buddies of people in Washington. And so I was pretty upset when I read that story, even though, look, I get it. The tariffs, like the levels that we're talking about are crazy. I understand these are crazy times, and I understand the financial system was brought to the brink last week. All right, but it wasn't the tariffs that created that problem. It's just the tariffs that's given it a nudge over the edge. Now, that was Friday night into Saturday morning. Yesterday, we got the counterpoint to this point. All of a sudden, President Trump goes on this long tirade on Truth Social and says it's all fake news, that semiconductors and chip-making equipment and smartphones have not been exempted. In fact, nobody is exempted. We just moved them to a different bucket. That was his words, not mine, a different bucket. Okay, we're in a bucket now. Inside that bucket is 20% base tariffs based on the whole fentanyl trade, the 20% across-the-board tariffs on China. So, all right, big tech pairs with some of those gains. All right, there maybe some of that enthusiasm is dampened. Everybody was saying, oh, my God, the NASDAQ is going to rip first thing Monday morning. And then, nope, you still got 20% tariffs, which are still pretty substantial. So, look, the one thing the market doesn't have here is clarity. All right, these headlines are changing by the hour. Guys, by the time this stream hits 1 hour old, who knows what will have happened. All right, things just moving very quickly. As always, be careful on leverage. The headline risk is just very acute at this moment. So that was the on-again, off-again tariffs over the weekend. Now, we've got a lot of news coming out of China this morning as well. China's doing some things. First of all, the national team is buying stocks. The national team, that's the nickname for China's sovereign wealth fund. I was saying all last week when I was looking at the international indexes, then China stocks were up like 0.25% when everybody else was selling off like crazy. I was waving my BS flag the whole time. I said, this is fake. The Chinese government is propping up their stock market. We got confirmation of that this morning. No price discovery in Chinese stocks. Be careful, guys. If you're out there buying those ADR shares, you don't really know what this stuff is worth. I'm watching some business basics, China insider videos over the weekend. These people who manufacture this stuff in China are now sitting on a mountain of inventory with nobody to sell them to. As much as it's crazy and insane for us to be putting tariffs on our trading partners, China is absolutely hosed without access to U.S. markets. There are big problems brewing overseas. Trade wars are messy. That knife cuts in both directions, and all the press, all the media attention right now is on the effect on America and everything because Orange Man bad, and I get all that stuff, right? kind of ignoring what's going on across the pond right now. The fact that the Chinese government has had to step up with some of the biggest inflows ever into their ETFs, courtesy of their government propping up stocks, well, things probably not looking so good. We're also seeing a lot of gold news coming out of China. There's a surge in gold futures trading, the highest level in a year. Gold is trading at a $20 premium over international prices in China. Chinese are buying up gold. They're moving to safety over there. Again, everything is not okay in China. By the way, shout out to the 50-cent army and all you adorable little Chinese trolls who show up and say, you are so crazy, American propaganda, China, #1 best ever. You guys are adorable, and thank you for the engagement. Also, a reminder to like and subscribe. They literally hire armies of bots to downvote videos they don't like. Seen it happen. Every time I say something bad about China, I get tens of thousands of downvotes. Anyways, also increased quotas for gold. That's a new one. China's central bank is allowing banks to import more gold than usual. I didn't even know they had import quotas on gold in China, but they're raising them now. They're letting the banks move into gold at a higher pace. This is after last week we talked about a story where the Chinese government was allowing insurance companies to start making investments in gold. Are you seeing the trend here? Chinese are moving to gold. The Chinese central bank added gold again for the month of March. It wasn't a huge amount, but they're still buying, guys. There's a lot of demand for the shiny overseas. Rare earths exports from China have now ground to a halt. We knew that was going to be one of their retaliations in the trade war. We got confirmation of that this weekend. None of that stuff is moving. Also, in a shocking discovery, the Chinese inspectors found salmonella in American poultry. Isn't that funny how tariffs cause salmonella poisoning now? Yep, that's a thing. China's retaliating against American farmers. We knew that was coming. Kind of a sleazy thing there. Or maybe they really did find salmonella and it's all just a wild coincidence. I don't know so much about that. Now, late Friday, we got some news out of Michigan. University of Michigan, their consumer sentiment survey was released. And wow, consumer sentiment continues to decline. People are worried about their financial situation. They're worried about the job markets. They're worried about tariffs. But the big thing, those inflation expectations, they are spiking like I have never seen. Now, look, there's a lot of people are very quick to dismiss these Michigan consumer inflation expectation data. A lot of people are saying, oh, it's just part politics. It's just Democrats. No, it's not. Yes, Republicans are lagging, but Republicans are starting to come around to this, all right? Republican and Democrat consumer inflation expectations have deviated wildly since the election. Not surprising. We are seeing Republican expectations starting to rise as the reality of these tariffs set in. Also, independents are siding with Democrats when it comes to inflation expectations. People are expecting prices to rise. And by the way, have you seen 145% tariffs? Prices are going up, guys. You better believe prices are going up. They are going up big time. You can argue the academic argument, oh, technically inflation is an expansion of the money supply. And what we are seeing with tariffs is higher prices caused by taxes, therefore not inflation. Consumers don't care about that. Consumers care about what the sticker says. And the price is going up. That means consumers think the price is going to keep going up. Consumers are going to start changing their behavior. And when consumers start changing their behavior, pulling forward purchases that they were planning to make in the future, but they're buying them now because they don't want to wait for the prices to rise, that can cause inflation. That is the very essence of on Mrs. Crack-Up Boom. Be careful. Those inflation expectations are rising very quickly right now. I've never seen anything like it. Don't dismiss that as political misinformation, all right? Pay attention to what your instrumentations are telling you and look at what it's actually measuring. We also got some very interesting information out of Apple this morning. A report by Counterpoint Research says Apple has reclaimed the throne as the #1 seller of smartphones in the world after the disastrous rollout of the iPhone 16 last year. In the first quarter, Apple rolled out the iPhone 16e, their base model, the cheapy iPhone, if you will, and people loved it. They're #1 again. It's almost like, hey, American car manufacturers, pay attention. People don't want overly complex, ridiculously overpriced stuff anymore. They can't afford it. They want the base model. Just throwing it out there. Maybe a simple car that can't be hacked and taken over, maybe that will actually sell pretty well in the United States. I just throw them out there. You guys do what you want with them. And last but not least, we got earnings from Goldman Sachs. they were pretty good. The bank earnings so far this quarter have been pretty good across the board. One consistent theme, trading revenue at all the big banks that have been reporting. Trading revenue is up. All the stock volatility that started with the election and then the sell-off as people started to worry about the AI bubble. And then, of course, the anticipation of the trade war. Big banks are cashing in on those trading fees. You got to love that. We got a lot to talk about, guys. Let's shrink my big melon of a head and see what's going on in the market this morning. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button so you can come on back tomorrow and have your coffee with the melon heads, because we do this one every day. And right now, the market's looking pretty good this morning. 1.53% higher for the S&P 500, 82 points to the upside. Again, that is all on that tariff news, on the kind of an exemption, kind of not exemption from the electronics tariffs. Apple, one of the best performing stocks in the market today on that news. The Dow, meanwhile, is higher by 448 points, 1.11% higher ahead of the opening bell. And the NASDAQ is leading the way higher, up by 1.88%, 352 points to the upside on that tariff news. Looking across the pond at some of the other indexes in the world, we've got German stocks are up by 2.75%. The FTSE 100, that's the British exchange, up by about 1.9%. The French CAC 40, 2.4% higher. Europe is having a pretty good day. Spain is up by 1.9%. Now let's scroll down to some of the Asian exchanges. We had the Nikkei, who's higher by 1.2% yesterday. Put a pin in that Japan. We'll be back to that one. And then look at all the Chinese exchanges, the Shenzhen, the Shanghai, the Hang Seng, all higher. Hong Kong stocks up 2.4%. All the Chinese exchanges up by about 0.5%. What's going on there? Well, it's exactly what I said was going on last week. China stock rescue in full swing as ETF inflows hit record. The Chinese government is bidding up their own stock market. Chinese exchange-traded funds received record inflows as state-backed buyers pulled out all the stops to shield the market against Donald Trump's tariff onslaught. Equity ETFs listed onshore saw nearly $24 billion in net inflows last week, eclipsing a record of about $23 billion set in October. That's according to data by Bloomberg. The bulk of the purchases went into ETFs known to be favored by China's so-called national team. The surge in inflows underscores the urgency with which Chinese authorities responded as share prices stumbled in response to the evolving trade war. The People's Bank of China said last week it will provide sufficient liquidity to Central Huijin Investment, the sovereign fund, which billed itself as a stock stabilization fund. The purchases appear to have worked, at least for now. The CSI 300 index is set to rise for the fifth session following last Monday's 7.1% slide. So look, while China is full of bluster and talking about how they're going to win the trade war and Trump needs to back off, and look, guys, nobody wins a trade war, all right? Don't believe this stupid propaganda. The Chinese government is pumping money into their own stock market to try to bid it up. Yes, we do it too through the Federal Reserve and the plunge protection team, but that is not a sign of strength. That is a sign of desperation. You better believe things are a mess over there, and the longer this goes on, the worse it's going to get, all right? Nobody is coming out of this without a bloody nose, certainly not China. Looking over at the U.S. dollar right now, we are at 100.00. Look at that. We had a little bit of a strengthening of the dollar, started around 8 o'clock this morning. I'm not sure what's driving that here, but that is down about 9 basis points still versus yesterday. The dollar has weakened pretty substantially over the last couple of days because mainly we're seeing a flow of capital from the United States back into Europe and back into Japan. Both the European defense stocks bidding up prices and Europe spending extra cash to try to build their own army. That is causing money to flow back into Europe, and the unwind of the yen carry trade is causing money to go back into Japan. Now, we had a little bit of volatility in the yen last night. Let's set this to maybe 5-minute candles so you can see here. All through the course of the night, we saw the yen, especially right before I went to bed last night, the yen was strengthening significantly. This is USD JPY. You see this chart moving lower. That's the yen getting stronger. There was talk about Secretary Bessent meeting with his counterpart in Japan to discuss Forex, and that coincided pretty much with this rapid drop in the chart, with this rapid strengthening of the yen. It got as low as 142.25, and it touched that level twice last night. Now the yen is weakening again. But keep an eye on that yen level, guys. That is very important here. Again, we are now below levels seen on August 5th, and that that panic in the yen carry trade. I have to move my my notes here. It doesn't even fit on the chart. We are now below that level, and we're at that level where the unwind of the yen carry trade could become disorderly. It hasn't quite yet. It came close last week, and I think that's arguably what convinced Trump to back off on those reciprocal tariffs and default them back down to 10%, pretty much for everybody but China. Looking over at the bond market, we got a little bit of a breather on the long end of the yield curve. Yields are down for now, but watch this through the course of the day. Right now, the 30-year Treasury, 4.835, down 4 basis points. The 10-year, 4.432, down 6 basis points. And the 2-year is down 2 points and change. Remember, guys, yields moving lower. That's bond prices going higher. So they're buying U.S. Treasuries this morning. The 1 month, meanwhile, is up almost 1 point at 4.328. And just to appreciate the craziness in the bond market, this is the 10-year yield. Looking at daily candles here, guys. Look at this announcement at the last 2 weeks, all right? Initially, when we found out the tariffs were getting here, we were seeing the yields move lower. Secretary Bessent was getting those lower interest rates that he wanted, especially the day or two after Liberation Day, after April 2nd. It really started to accelerate. Then something happened midday Friday, April 4th, and that's when the bond market started to dysfunction, and we saw yields rip higher all week. Now, they're down this morning, but keep an eye here, guys. This volatility in the 10-year yield, the world's most liquid asset, is something noteworthy, all right? This goes to show you just how crazy things were last week. I don't think we're necessarily out of the woods here, although the worst appears to be behind us for now. Looking over at the commodities board, we've got gold moving lower this morning, $31.97 for spot gold. That's down by about $38 or 1.2% lower. Spot silver is also lower by 1% at $31.94. Copper, meanwhile, 1.4% higher. Platinum's up by 1%. Palladium is up by 4.3%. Big move in palladium this morning. And crude oil is even higher by 1.1% at $62.20 for May WTI futures. I think the news of that tariff suspension, delay, not delay, whatever you want to call it, exempting tech products maybe gave people a little bit more confidence about the health of the global economy. They're bidding up oil this morning because of that. Now, let's talk about some of these gold headlines because China is buying up gold. Even though it's down this morning, we've got a gold trading frenzy erupts in China as tensions with the U.S. escalate. This one on the 14th, just this morning, China saw an explosive surge in gold trading last week as the metal hit successive records and Sino-U.S. trade tensions rose. The Shanghai Futures Exchange saw trading volumes of the precious metal hit the highest level in at least a year. That was thanks to investors and industry players, refineries, traders, and retailers that have ramped up hedging activities as global markets gyrate in response to trade policy changes in the U.S. and China. Demand for gold is strengthening, with investors seeking safety as a new trade war unfolds between the world's top two economies. The buying frenzy in China has seen prices move to a premium of around $20 an ounce above international prices, reversing a discount that had saw for the majority of the past year when domestic demand was weak, according to Bloomberg. The country's central bank added around 2.8 tons of gold in March. That's the fifth monthly addition in a row, and heightened global tensions may spur more bullion purchases. So China's central bank is buying again 5 months in a row. Now, let's keep that in context, though. 2.8 tons of gold, that's a lot for you and me, not so much for a national central bank. In 2019, for example, the People's Bank of China added more than 100 tons of gold in reserves after relations with the U.S. worsened during Trump's first term. Now, more China gold news. We've got China offers bank extra gold import quotas as investors flock to gold, I should say. The People's Bank of China has allocated fresh gold import quotas for some commercial banks, people familiar with the matter said, as Beijing responds to strong haven demand from institutional and retail investors in the face of an escalating war. The central bank typically limits the amount of physical bullion coming into the world's top consuming market. The additional quotas were allocated last week to meet significantly increased appetite, the people said. They asked not to be named as the decision is not public. Now, Chinese demand has also been shored up by a pilot program that allows insurance funds to invest in gold as part of efforts to optimize their asset allocations. We talked about that one last week. Inflows to onshore bullion-backed ETFs driven by retail investors have been unusually strong. So we got a lot of demand for gold in China. Maybe you got a little bit of Chinese dumping U.S. debt moving into gold for safety. And look, that's probably largely contributing to this rip your face off move in gold that we saw last week. Now, again, gold is down this morning. I'm not surprised because gold ran about $265 in a span of 3 trading days. That is an incredible move in gold, 8-9% in 3 days. The world's safest investment is not supposed to trade so volatile. So I wouldn't get all down in the dumps on that red candle this morning here. That's a pretty significant move there. Obviously, demand in China playing a role, as well as in the States. People are looking for safety. Now, Bitcoin, meanwhile, is up this morning, as is tech stocks. Bitcoin tends to trade in lockstep with the NASDAQ, at least for the time being. Here we're at $85,056. That's up about $1,300 this morning. One thing to note, guys, a couple of important things in the technicals. We talked about how it was hugging the 200-day moving average for a few weeks, and then we saw a breakdown. That breakdown coincided with this death cross here, with the 50-day moving average moving below the 200-day moving average. Majorly bearish indicator. And now if you zoom in on this chart here, you can kind of see we're struggling with the 50-day moving average as we're bouncing up and down above and below that chart, but still with a downward bias. So the technicals still look pretty ugly for Bitcoin here, although it's getting some relief this morning at $85,000. All right, let's talk a little bit about this tariff confusion and what happened here. This one is in CNBC. This is actually dated from yesterday, but it kind of gives you a good idea of what's been going on in the market. President Trump and his top trade officials on Sunday added to the confusion over his administration's tariff plans, including newly announced exemptions for reciprocal tariffs on electronics products such as phones, computers, and semiconductors. Trump and his aides suggested the exemptions, which erased added tariffs of 145% on many Chinese electronics devices and components, would be partially or completely reversed in coming weeks. A separate 20% tariff on all Chinese goods is still in effect. But Trump on Sunday afternoon cast doubt on the duration of the exemptions, which were seen as a boon for tech companies, including Apple, which makes iPhones and most of its other products in China. Nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst, said President Trump in a long run-on sentence on Truth Social. There was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket, Trump said. The fake news knows this, but refuses to report it. We are taking a look at semiconductors and the whole electronics supply chain in the upcoming national security tariff investigations. So Trump is leaving the door open to additional tariffs on these electronics. Apparently, we're going from the 145 down to the 20% baseline tariffs. And then his Commerce Secretary, Howard Lutnick, weighs in, and he says that the exemptions are temporary and said that separate tariffs for electronics products are coming soon. So on again, off again. How are you supposed to plan like this? You can't. And guys, this is why I'm saying the news cycle is just moving so fast here. There's really no way to tell. I mean, by the time this stream is over, there could be another announcement saying, nope, we changed our mind, 145% tariffs on the electronics. So just be careful. Meanwhile, China is fighting back here. China's rare earth exports grind to a halt as the trade war controls bite. This one was on April 11th here. Shipments of 7 rare earths placed on an export control list last week by Beijing have ground to a halt, 3 sources said, raising the risk of shortages overseas as China's exports begin long, uncertain wait for government licenses. Shipments stopped on April 4th, the sources familiar with the matter said, when Beijing restricted the export of 7 rare earths and related materials used across the defense, energy, and automotive industries as part of its retaliation against President Donald Trump's tariff hikes on Chinese goods. China produces some 90% of the world's rare earths, and the export restrictions demonstrate how Beijing can weaponize that control to all but sever supply of the vital elements to users around the world. However, the export controls are also likely to chip away at China's dominance because they will force overseas buyers to accelerate their diversification away from China, even if that process is likely to be lengthy. Several Chinese rare earth sellers have already declared force majeure on their contracts with overseas buyers. That's according to 2 analysts. Cargoes already at port waiting for shipment have been barred from leaving if they have not cleared customs, they added. Something else to keep an eye on with this rare earths, guys, is the Defense Production Act. I would not be surprised to see some kind of news in the next couple of days. President Trump evoking the Defense Production Act to accelerate domestic production of rare earth metals. They were talking about doing that during the Biden administration. I don't know that they ever actually did it. At this point, though, I don't know what they're sitting around and waiting for, because the Chinese are refusing to sell it to us. And this stuff is vital to a lot of domestic industries as well as the military. And then in the eye roll of the day, we got this one in Forex Lives. China Customs says detected salmonella in imported American poultry meats and bone meal. Yeah, right, says Eamon Sheridan on Forex Live. I got a kick out of this. China Customs says it has detected salmonella in imported American poultry meats and bone meal. Customs will strengthen the inspection of quarantine of imported products strictly in accordance with laws and regulations. Such discoveries tend to happen at times of heightened trade tension, it seems. So who figured trade wars cause salmonella outbreaks now? Wow. Science will be puzzling over that one for years to come. All right, now let's talk about this Michigan news from last week, guys. This is maybe a few days old, but this is important. All right, first of all, Michigan consumer sentiment, you can see it here. In December, it hit a peak after the election of 74. It is now declining rapidly, 50.8. All right, this is a very substantial decline. Let's set this to a 5-year chart. You can kind of see we're actually falling faster than we fell during the bear market of 2022. So the consumer is getting worried. Inflation has taken its toll. Inflation is going to get worse because of the tariffs. Forget the academic definition of inflation for a second, please. Prices are going higher. And so people are less confident. But it's not the consumer sentiment that you need to worry about. It's the inflation expectations. Look at this chart. 1-year inflation expectations, according to the University of Michigan. We have gone from 2.6% in November to 6.7%. And understand, guys, the Fed watches inflation expectations very closely. Now, they've been very dismissive of this data for the last couple of months, but how much longer can this chart continue to spike like this while the Fed continues to ignore it and says, oh, it doesn't meet the narrative that we're trying to spin, and so we're not counting it? All right. Yes, this is largely among Democrats, but independents are right behind them. Independent inflation expectations are rising, and even Republican inflation expectations have turned upward and are starting to rise, although they're much lower than independents and Democrats. Guys, prices are going higher. Now, look at this. Let's zoom out to a 5-year chart. Look at the year-ahead inflation expectations. Even in April of 2022, when CPI was pushing 8-9%, year-ahead inflation expectations were only 5.4%. All right? The public was largely on board with Team Transitory back then. And now look at them, even higher than they were back then. And look at how fast they're rising. Pay attention to this. This can make prices rise by itself. If people think prices are going to go up, they're going to make prices go up by buying things sooner rather than later. And when everybody does that, that additional demand drives the price higher. We're seeing the same thing in the 5-year inflation expectations. Now, 4.4%, up from 4.1 in March and 3.5 in February. And again, if you zoom out 5 years, it's even worse. Even at the peak in 2022 in June, they were just 3.1%. All right, when inflation was going bananas, the 5-year inflation expectations, according to John Q. Public, was that, don't worry, the Fed has this under control. We'll be back to 2 or 3% in 5 years. Now they're saying 4.5%. Pay attention to this, guys. This is a big deal. Way too many people are looking at this number and saying it doesn't matter. Oh, the New York Fed number is different. I can't dismiss a data point like this. I can't just look at this and chalk it up to politics and walk away from it, guys. If the other guy was in charge, would you do the same? If President Prune Juice was still, pooping his pants in the White House, would you dismiss a number like this? Probably not. Don't do it just because your guy's in charge. Now, Apple takes the top spot for the first quarter in smartphone sales. Data shows, this one's from Counterpoint Research this morning. Looks like Apple took the top spot for global smartphone sales in the first quarter on the back of the iPhone 16e's launch and strong demand in countries such as Japan and India. Data from Counterpoint Research showed on Monday. Counterpoint expects the smartphone market to decline this year, though, due to economic uncertainty and tariffs imposed by U.S. President Trump. Now, a volatile macroeconomic environment can cause consumers to postpone the purchase of mobile phones, unsettling the supply chain and increasing trade risks, which can negatively impact the market, the report said. But there's this key quote in here. As per our current estimates, the tariff announcement did not lead to a major demand increase because of the uncertainty around tariff policy. Now, this is March data. So they're saying the tariff announcements back in March didn't change consumer behavior. However, since the tariffs were announced in April, it did not impact iPhone demand in the first quarter of 2025. And then thank you, Captain Obvious, the first quarter of 2025 ended in March. So basically, guys, the smartphone market has not yet been impacted by tariffs, or at least it's not showing in the data. But the point is pretty clear here, guys. The market likes the economic iPhone. They like that base model, the iPhone 16e. And keep in mind, this is after the iPhone 16 and the Pro Max and the Pro Max Deluxe, Ultra, whatever, slap on as many buzzwords as you want. The market largely rejected those things, especially because they were marketed with an Apple Intelligence function that still doesn't work a year later. People want the base model. Pay attention, guys. As that consumer confidence declines, like we were just talking about, those base models will become more attractive to cost-conscious consumers. Now, Apple stock is ripping this morning here, up 5.7% after the opening bell, $209.56. Apple also caught a couple of downgrades in the last few days from Goldman Sachs and JP Morgan, but right now it looks like that delay in the tariffs, or the not delay in tariffs, however you want to spin it, that tariff news is bullish Apple. That Counterpoint Research note is bullish Apple, partially offset by some analyst downgrades and the continued uncertainty in the market. Last but not least, guys, we have got Goldman Sachs tops estimates on a boom in equities trading revenue. We've seen this pretty much across the board with the bank stocks in this earnings season. Goldman on Monday posted first quarter results that topped expectations on stronger than expected equities trading revenue. The bank said profits rose 15% from the year earlier period to $4.74 billion, or $14.12 a share, as revenues climbed a more modest 6% to $15.06 billion. The bank said that rising trading revenue in the quarter offset a slight decline in asset and wealth management revenue compared to a year earlier. On Friday, rivals JP Morgan and Morgan Stanley each topped expectations for first quarter results on booming equities trading. Equities trading revenue surged 48% and 45% at the banks respectively, thanks to volatility in the opening months of President Trump's tenure amid his efforts to reshape global trade agreements. So Goldman Sachs looking pretty good this morning, up 2.5%, trading at $506.45. The surge in trading revenue, good for the Goldman. And I just want to say thank you very much to Mr. Charles G. What's going on, Charles? Thank you so much, sir, for supporting the channel. He says, then I heard about the exemption for tech was beyond upset. I think you meant to say when you heard. Yeah, I was pretty upset by that one too, Charles. I was like, who, Tango Foxtrot, cares about their profits? I don't. Well, look, Apple's profits, big tech profits, I'm not going to say I don't care about them, because, look, that's the biggest percentage of 401ks and IRAs and pension plans, right? You might think you're in the, Morgan Stanley Mutual Growth Fund target date such and such, or maybe you're in the iShares Who Gives a Whoosie Fund Target Annual Growth Deluxe, whatever. They're all in the same 7 stocks. All right. It doesn't matter what fund it is. They're buying Apple, they're buying Microsoft, they're buying Amazon, they're buying Google, Meta. All right. So I'm hesitant to say who cares, because that does affect the average person's wealth, the average person's nest egg and bottom line and retirements. That being said, in the context of small business being faced with 145% tariff on Chinese imports, in that context, I got you, Charles. Who TF cares about Apple's profits in that context? Why is Apple getting 20% when everybody else gets 145? And by the way, small business, they're not the ones who exported jobs. They're not the ones who destroyed the Rust Belt and gutted the American working class. It wasn't small business that shipped those jobs overseas. It was big tech, the most prolific outsourcers of them all, Apple. They hire hundreds of thousands of people in countries that hate us, all while lecturing us about morality on whatever political cause du jour is trending on Twitter here in the United States, be it a bathroom or a voter ID law. They've got plenty to say about that. but they will be the single largest contributor to the gutting of the middle class in America, silently so, getting rich off of it. And then we give them an exemption? And I'll be honest with you, I don't know what the president is thinking. It's not like these are his friends. Big tech hates him. Big tech censors him. I mean, just this weekend, there was this video of Trump walking in the UFC going viral. It was getting hundreds of thousands of views a minute as the crowd was like roaring and standing on their feet. And Facebook deletes the video. Facebook took it down. They banned it. They censored it. Why? Orange man bad. Yeah, let's give them an exemption. I don't know. I don't get it. I was pretty upset by that too, Charles, to be honest with you. We are in this together or we're not. That's how I feel about it. And look, China, everybody's like, oh, we're at war with China. We're waging war against China to, try to get them to trade fair. No, we're not. I've been saying this for a while. China's never going to do what we want. All right. China's going to do whatever the hell China wants. Let them do it over there. Who cares? All right. The target in this trade war is American companies. It's to get American companies to build their factories here, to make their stuff here. That's the goal of the trade war. It's not to get China to buy more LNG or more soybeans. All right, yeah, that'd be nice if they closed the trade deficit. We need to reshore domestic manufacturing because if China moves on Taiwan, we are hosed. They control all our medicine, all our electronics, all of the rare earth metals, all the chips that go into everything. That's the target in the trade war. It's our companies. And the companies that we need most to come back to the United States were just exempted or not exempted or exempted again, depending on the headline. All right, we're going about it clumsily. I don't know if this trade war was a good idea. I don't know if tariffs is a good idea. History is still out. The jury's out on that when it comes to history. But I do know we're going about it very clumsily. That I can say with the utmost confidence. Anyways, maybe I'll climb down from that soapbox now. Thank you, Charles G., for supporting the channel. And he's back again. He says, I get what Trump is trying to do, but this bouncing around is ridiculous. Yes, echoing that sentiment exactly. Just set it, leave it, and exempt nothing. I support Trump, but dang. Yeah, I mean, look, I already got more political than I wanted to today, unfortunately. I guess I'm easily baited. But that was a gut punch Saturday morning. I'll be honest. I felt the same way when I saw that. When small business eats the tariffs, big tech gets an exemption. It's just not fair. And even though they're like, no, nobody's exempt, we just move it to another bucket. Okay, they still get 125% discount on the tariffs versus what the average small business has to pay. We're in this together or we're not. I'm with you, Charles. Thank you, sir, for supporting the channel. And Sarah Alexander says, Jack, your thoughts on Chinese tariffs affecting cost and availability of medicine, a huge issue for a lot of Americans dependent on life-saving meds. Yes, Sarah, it absolutely is, and we still haven't seen that one. And one of the things that Lutnick mentioned over the weekend, Secretary Lutnick of Secretary of Commerce, he said that we are going to see some sectoral tariffs on semiconductors and pharmaceuticals soon. He didn't say when, he said soon. The implication is within the next month or two. Absolutely, that's going to drive medicine prices. And by the way, U.S. pharma companies, U.S. healthcare companies, let's talk about outsourcing. I was just ragging on big tech and beating on Apple. Our pharma companies have done the same thing, and they have gotten insanely wealthy doing it. Now, yes, when those tariffs hit and they drive the prices up, that is going to be brutal for the average person who's dependent on life-saving meds. It's also going to be brutal for your government's deficit. Remember, Medicare, was it Part D? What's the big prescription drug section of Medicare? That is a huge line item in the federal budget. So those tariffs are going to drive the prices higher for our own government. So it could cause the deficits to go higher. Now, here's the thing. That is insane, Sarah, and that's going to hurt people. But let me just add this. Doing nothing is insane and is going to hurt people because Taiwan is going to happen, guys. China is dead set. Unless their government collapses, unless there is an uprising in China tomorrow and that government collapses, which I wouldn't put it past them. They're a brutal regime, and brutal regimes tend to topple like that. But unless that happens, China's gonna roll on Taiwan. It will happen. And when that happens, they're going to cut us off from medicine. And everything I've read says 2027. So if we're on the clock here. We got 2 years to start making our medicine here before we can't get any of it. And I'm not talking about tariffs driving prices higher. I'm talking about an embargo driving prices to near infinity as thousands of people dependent on the same medication start outbidding each other for medicine that they'll die without. And let me ask you, how high would you bid up the price of a pill if it's the difference between life and death for your kid? The answer is everything you got. That's what it would come down to. So not doing anything is insane. Not doing anything is crazier than what we're currently doing. That's getting lost in a lot of this discussion about the trade war and the tariffs. Everybody's very quick to just say, oh my God, it's crazy. Prices are going to go higher. The consequences of doing nothing are probably worse. Almost certainly worse, in my opinion. Thank you, Sarah. Appreciate the super chat. Will Yang says, I think Trump wants China to buy U.S. bonds. Well, Will, that ain't happening. China's selling U.S. bonds. They've been selling them for 10 years. Their holdings are, I think, about $750 billion. We haven't gotten any data points recently. There is some evidence and some movement in the charts to suggest China has been dumping U.S. treasuries and then flowing into gold. Certainly some of the headlines we read today support that. I haven't heard anything about getting China to buy more U.S. treasuries, to be honest with you. Maybe they'll ask for it, but that ain't happening. That's just not happening. China is, look, they watched what happened to the Russians when the Russians invaded Ukraine and we seized all their holdings of U.S. dollars, all their U.S. treasuries. China's not going to sit around and wait for that to happen to them when they roll on Taiwan. So that $750 billion is going to go to as close to zero as they can get it before they roll. I don't know if they'll be able to get it all the way down to zero. That'll take years, and they'll probably break something before they get to that point. But China's not going to sit around and wait to have their wealth stolen like we did to Russia, whether you were in favor of that or not. We took their money when they invaded Ukraine. China's not going to wait for that to happen to them. Thank you, Will Yang, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the super chats and the generosity, guys. Shout out to my magnanimous Melonheads on Patreon and YouTube. Thank you guys so much for everything you do. Links down below, should you feel so inclined. Don't forget that like button for the algorithm and that subscribe button for the algorithm on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.